You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit TheOptionsInsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. I'm your host, Brian Overby, Ally Invest Senior Options Analyst and author of The Options Playbook. All right, everyone. These are unprecedented times. I'd be nice to go back to the precedented times if we could. But the way that the markets have been trading lately, they've been actually a little bit choppy, if you could use those words. The other day, we did have a fairly big run-up in the S&P 500 index, and we actually saw the VIX kind of stay flat. So to me, that means that there's still a lot of uncertainty in the marketplace. We still got that VIX hanging right around that 30% level. It just can't seem to get down to the 20 level, which I would call a more normal level for the VIX index. There's still just a lot of fear in the marketplace. And the one thing that we're really looking for to help out these markets is some type of cure or more positive news about a potential vaccine for the coronavirus, or just something from the medical field that will give us some comfort that we could maybe get back to normalcy before the end of the year. So with that said, I'm going to actually do a trade this week that's going to be relative to that. We're going to be kind of looking for that news. And the airlines have been kind of scary to be trading in. They've gone down, they've gone up. Warren Buffett bought some Delta Airlines and then sold it, and the markets are actually up from their lows as far as the airlines are concerned, but the airfares and the ridership and the planes are still flying at about 80% of capacity overall. The TSA numbers of people actually going through the airports is down almost 90%. Since all this virus scare has started. So I'm going to play something in the airlines. Now, this is definitely not meant to be a recommendation. This is a very speculative trade that we're going to be looking at. And what we're going to do is a little different. Now, on Options Playbook Radio this year in particular, we've talked a lot about long straddles. And the concept is that you want to buy a long straddle on something that's not necessarily in the news, but could get blindsided by news headlines. Now, one of the long straddles that we discussed, a couple of them actually, we talked about one in Boeing before all of the coronavirus stuff, and it was just basically because of their MAX plane. And when would the plane fly? The stock was very volatile, just trying to figure out when that plane might fly, and those long straddles worked out pretty well because news headlines were hitting left and right without any anticipation that if they were going to fly, if the plane was going to fly, if it wasn't going to fly, some of the news, what's happening to the earnings, what's happening to the valuation of the company, company, and that stock had more volatility than what the market was anticipating. And that's kind of what we're looking for when we're doing any long straddles. We also looked at it in oil. We talked about how the ETFs that track the oil have a lot more volatility in them than you might think, and not to mention the fact that just oil in general was very volatile. Well, we were thinking that the underlying might be more volatile than what the option prices were implying. So we did long straddles in oil. Now we're going to try one on the airlines, and I'm going to just kind of change things up here. This will be the first time I have ever talked about I don't even know what to call it, a pair straddle, an opposite pair straddle, because we're going to look at a long straddle in two different airlines. So we're going to go out and talk about Southwest Airlines, which is right now we're taping Options Playbook Radio. The market is closed. It is the 27th of May. It is a Wednesday. And Southwest Airlines last traded at $33.66. Now, we're going to also compare that to United Airlines. That last traded at $30.69. And you might say, well, why did you pick those two airlines? Well, they're both trading for $30. That's part of the reason why. But I do also have I'm a little bit more bullish on Southwest Airlines because they don't have as much overseas exposure as United Airlines does. So we're going to buy a put in United Airlines for the downside, and we're going to buy a call in Southwest Airlines for the upside. Very speculative trade here, not meant to be a recommendation, but I think it would be a very fun trade to watch. Part of the reason why it's so speculative is that the volatilities have came off in all the stocks in the marketplace. The VIX was up above 50, actually set almost a new high in the volatility compared going all the way back to 2008. Now, a lot of that volatility has came out of the marketplace. And if I look at a 30-day implied volatility, and I'll just focus on Southwest Airlines here, symbol LUV. When we were in the heart of the downturn of the market, the implied volatility ran all the way up to 200% implied volatility. We now have it at a mere 55% implied volatility. But just be aware that implied volatility normally in LUV is trading below 20% implied volatility. So we're still in highly volatile times, but we've definitely came off as far as volatility is concerned. And as a matter of fact, implied volatility at this moment is actually trading below what the historical volatility, or you could call the actual 30-day volatility, is in LUV. So if we do this trade, one of the things that we're kind of hoping for is that there's some positive news about a vaccine or a virus that comes out over the time period of these option contracts. Now, I looked at going out longer in time. We're going to focus on the June 19th expiration. I would have loved to have gone out to July, but volatility is just too high and it's just too expensive. And we're just going to have fun here with this trade on Options Playbook Radio anyway. So I figure we're going to go out to that June 19th expiration date, and that's going to give us 23 days. So over the next 23 days, we hope some positive news will come out in the airlines. And if not, well, maybe some negative news will happen, but we're rooting for the positive, and we're going to buy a just out of the money put in United Airlines and a just out of the money call in Southwest Airlines, symbol LUV and symbol UAL. This will be a long straddle. I'm trying to come up with a fun name for it, almost like the evil long straddle. I'm not really sure what to come up with. The evil stepbrother. So because of lack of a better name for it, we're just going to call it a long straddle in the airlines. Okay, so here's what we got. I'm going to go a little bit out of the money just because the cost is so expensive here. We got the Southwest Airlines. Last trade on May 27th, markets are closed, was $33.66. We're going to buy the 34 call. That market is 195 by 210. So we'll say $2. We'll go a little bit at the midpoint on this. You're going to have to work that order, but the markets are closed anyways. And then if I go over to United Airlines, it's got a little bit more juice in it, actually. Same expiration, June 19th. We see United Airlines stop trading at 30.69. That was the last trade in United Airlines. And that market is 291 by 305. So we're going to say we could fill at 3. We're going to make the math really simple here. So if we buy the Southwest Airlines call and we pay 2, and we buy the United Airlines call and we pay 3, we have $5 of total exposure. Now, I don't really want you to do the math on this. If you think of it on a $30-some stock, well, then we're talking about a 15% move over the next 23 days. Now, these stocks have made that move on the downside and then actually back up. So it's not like it's unfathomable for them to make a 5-point move if we get some major news headlines. But that's really what we're looking for. And by the way, they've already announced earnings, and I would have avoided earnings. I wouldn't want to do this long straddle on a known news event. We're looking for some news that's going to blindside the market. That's why we're doing this. So we're looking about a 15% move over the next 23 days, either to the upside or the downside. Now, if I put this trade on, we need to have a plan. If I can make that $5 on one of these option contracts, in other words, I pay $3 for the UAL put and I see that trading for $8, I'm going to think about getting out of that. If I do the same thing on the call side with Southwest Airlines and I pay $2 for it and I see that trading for $7, I'm going to think at that point in time about potentially getting out of it. It's all about the market conditions. I don't have any problems legging out of these positions overall. So once again, let's go back and recap, and it'll be kind of a short and sweet Options Playbook Radio here. We're going to do a unique straddle in the airlines. We're going to go out to the June 19th expiration. We're going to have $5 at risk. For every one-by-one straddle that we're doing, we're hoping to cap our risk at $5 or $500 on this position. Now, don't forget, you got to add commissions into this. This is just going to be a speculative paper trade on the airlines. So we will be buying the June 19th 30-strike put in United Airlines, and at the same time, hope to buy the ULV Southwest Airlines 34-strike call. We're hoping to pay a net debit of $5. That will be our total risk, but we're going to have to leg into this. We can't enter this all as one trade, so we got a little bit more risk that's involved. We're hoping that we get at least a 5-point move over the next 23 days in one of these underlyings. We'd like to be able to at least sell and get out for what we got into the trade and then let the other side run. That's kind of be our goal. But overall, it's just kind of a fun trade to watch. In United Airlines, it's going to have $5, or I'm sorry, in the airlines, that's going to have $5 worth of risk. All right. That's it for this episode of Options Playbook Radio. If you have any questions you'd like us to answer on the program, please email me at theoptionsguy@invest.li.com. Thanks for listening. And until the next time, may all the options that you bought finish in the money and all the ones that you've sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.